Okay, so I'll go ahead and share my screen now. Okay. So I'm actually going to start the beginners that just joined. Okay, people that don't have any knowledge in Forex at all that just joined this class. So I'm actually going to be starting all the way from beginners course. So let me open a brand new fresh chart. Okay, so I'm going to start by telling us what Forex is all about. Now, Forex simply is the buying and selling of foreign currencies, okay? Like the name goes, Forex, it's just an abbreviation for foreign exchange, right? Forex is just an abbreviation for foreign exchange, and it's simply the buying and selling of currencies online. Okay, so let me just give an instance. Take for instance, you're in Nigeria and you travel to probably Ghana or United States or London, whatever country you actually travel to, right? You're not going to use Naira when you get to that country. Okay, you're not going to use Naira. You're going to need the currency of that country you travel to. Sorry. You're going to need the currency of whatever. Please, if your background is noisy, can you kindly mute? If your background is noisy, please mute so that we have a very, very clean record. Thank you very much. Okay, so if you probably traveled to another country, please can we mute our background? Please can we mute our background? Mute, please, everybody, kindly mute, please, so that we have a clean recording. If you want to ask a question, then you unmute. Thank you. Okay, so I was giving an example, right? I was trying to tell you that, for instance, if you travel to a country, probably you travel to London, America, whatever country it is you travel to, you're not going to need Naira in that country. You're going to need the currency of that particular country you travel to for you to be able to make transactions in that country. All right. So the process of you exchanging your Naira, okay, the process of you exchanging your Naira to whatever currency it is of that country. And now that process, that thing you have done is what we call Forex. Okay. But now you're doing it manually. Okay, that process of you exchanging whatever currency, you're probably exchanging your Naira to cedis or dollars or whatever currency. That process you've done is what we call Forex. That is simply what Forex is. Okay, but now you're doing it manually. Now, what we do online is the same thing, but now we are doing it online. So you just get the difference. So you're just trying to exchange one currency from the other, one currency to another currency, and that is simply what Forex is all about. There's not too much hassle about Forex. Now, what does this entail? The way you just exchange currencies, man. Now, how do you do it online? Online, you just want to buy the currency of a country when it has strength. Okay, let me be very, very literal. When the currency is going up, okay, when the currency is going up, you want to buy. Okay, and then when the currency is coming down, you want to sell. Okay, that is simply what we do in the Forex market. Now, how do you know when the currency of a particular country is going to go up or when it's going to go down? You will not know. Okay, that is actually why you now need this knowledge. Okay, that is actually why you now need this knowledge. This knowledge will now help you to be able to do analysis on a currency and know that, okay, this currency is going to lose strength from here. Okay, for the fact that this currency is going to lose strength from here, I should sell this currency. Are you guys following me?
Yes.
Please, I want this class to be really, really interactive. Okay, how many people do you have in this class now? We have Kelechi, we have Jennifer. Please,
present.
Okay, so please, who is pretty? I want to know the people I have in this class to be sure that they are my students. Who is pretty? Pretty, please, can you unmute? Amanda. Okay. Who is iPhone? Who is the other iPhone? I'm saying another iPhone down. Who is iPhone? Who is iPhone? Is that Rita?
I don't think she's here.
Okay. Okay, the iPhone already left. Okay, she's back. I want the class to be really, really interactive. I want to make sure that you guys are understanding what I'm saying. So as I'm explaining and I ask a question, you guys should respond. So let's be sure that everybody's being carried along. iPhone, please, can you unmute and introduce yourself? Okay, let's go ahead. I think that's either Rita or I think that should be Rita. Okay. All right, so as I was saying, now, why do you actually need this Forex knowledge? You need this knowledge to know when the currency of a country is going to probably go up or come down, so that when, but now, trust me, you don't want to be on the opposite side, okay? You don't want to be... Wow.
I can't hear you.
Okay, so I'm muting everyone, yeah, because if your background is noisy, or you can actually just mute by yourself, so I will have a clean recording. Unless you want to ask a question, then you unmute. I want the recording to be very, very clear, so that when you guys are listening to it later, you're not going to be having any distractions. Okay. All right. Thank you.
Okay.
Okay, so I was trying to explain. So I was trying to get that you actually need this knowledge for you to know when the currency of a country is going to gain strength and when it's going to defend. Now, I'll also tell you guys that you don't want to be on the opposite side of this game. Okay, when the currency of a country is gaining strength, and that means you're supposed to buy. Okay, but if you're selling at that particular time, you're going to be losing money. Okay, so that is how people lose money. So if the currency of a country is losing strength, which the currency of a country is either gaining strength or when it's losing strength, so that you are not losing your money. All right, so this is actually what we do in Forex. It's actually as simple as that. Okay, now what do you want to do? You want to actually learn how to do this analysis and know when the currency of a country is going to get, so you know whether you're buying or you're selling. So this is the whole summary about Forex. This is the whole summary about Forex. So when you're looking at my screen, I have what I call candlesticks on my screen. Okay, I have what I call candlesticks. This is how data is represented in the Forex market. So you can see these ones that are like green. Okay, it looks like they are moving in an upward direction. Okay, they are trying to represent that. I actually don't want you guys to color code it, because you can actually change the color. But whenever you see candlesticks moving in an upward direction, okay, it means that that currency is actually gaining strength at that particular time. And whenever you see candlesticks moving in a downward direction, it's moving here. Okay, now the currency of that particular currency is losing strength. Okay, and now when it's moving in this upward direction, that is when we buy, and when it's moving in this downward direction, that is when we want to sell. Okay, are you guys, if you're following what I'm saying, please drop some ones on the chat box. If you're actually following me, please drop some one on the chat box. Let me know if you guys are following what I'm explaining. Drop one on the chat box if you're following what I'm explaining. Okay, amazing. All right, so that is it about what is Forex. Now, what are the tools you need as a Forex trader? Okay, I sent out a scheme for us that we are going to follow. So we're looking at the scheme. Second thing we have there is tools you need as a Forex trader. What are the tools you need as a Forex trader? Number one, you need the MetaTrader 4 application or MetaTrader 5. Okay, but for the sake of this class, we are going to be using MetaTrader 4. So if you've downloaded the app, drop some two on chat box. Yesterday I said it that you guys should download the MetaTrader 4 app. If you've downloaded it, fine and good. That is number one. That's one of the tools you need as a Forex trader. Now, what is MetaTrader 4? MetaTrader 4 is a trading platform. What do I mean by trading platform? This is where you place your trades. Okay, this is actually where you do the transactions. This is where you do the buying and the selling of the currencies on that application called MetaTrader 4 or MetaTrader 5, whichever one you want to use. But I recommend MetaTrader 4 because that's also what I use. That is the first tool you need as a Forex trader. Now, the second tool you need as a Forex trader is Trading View. Now, this interface you're seeing on my screen is called Trading View. Okay, this interface you're seeing on my screen is called Trading View. Now, what is Trading View used for? Trading View is used for analysis. Okay, Trading View is used for analysis. Okay, now this is actually where you do your analysis to know if you're going to buy or if you're going to sell. So I want you guys to know the difference between these two applications. I want you guys to know the difference between these two applications. Okay, this one is a website. Now, this is a website. Please can take a screenshot of it. Tradingview.com. Okay, this is a website where we come to do our analysis. So as this class goes on, we're actually going to learn how we can do your analysis. So when you do your analysis here, okay, after doing your analysis here, for instance, right here, I think I'm buying right here. Then when you done your analysis says buy, okay, then you now move to your MetaTrader 4 and then place your orders. Okay, there are areas in your MetaTrader 4 that gives you the parameters where you can place your order. Hi guys, if you're following me, please drop one on the chat box. If you're following me, please drop one on the chat box. Can everyone hear me?
Yeah, we can hear you.
Okay, so if you're following
yes,
what
I can
I'm
hear
saying,
you.
so, yeah, if you're following what I'm saying, so far, drop someone on the chat box. Amazing. Amanda, you're not saying anything. I don't know if you're following this class. I really need everyone to communicate in this class. Okay, if I ask if you're following, please actually indicate if you're following or not. Please actually indicate. If you're lost at some point, please indicate that you're lost. I don't want anybody to be lost in this particular class that I'm taking. Okay,
I'm here.
good. You're following what I'm saying, Abi?
Yes.
Okay, good. Now, these are the tools that you need as a Forex trader, the MetaTrader 4 and the Trading View website. Amazing. Now, let's move on to the next. Now, the next thing we're looking at market participants. Now, what do I mean by market participants? Market participants are people that are actively involved in the Forex market. Okay, market participants simply means people that are actively involved in the Forex market. Then what do I mean by active? People that actually do the buying and selling processes. Okay, now who are these people that are involved in Forex market? We have the central banks, which are the number one players. Central banks are the number one players in the Forex market. Okay, we have central banks. We have banks, we have hedge funds, we have brokers, and we have individuals. And we have, so these are the people that are actively involved in Forex. This is supposed to be individuals, sorry. Let me correct this. Now, these are people that are actively involved in the Forex market. Now, these people that are involved in Forex market, you can categorize them into two. Okay, we have people that are in the Forex market to make money, and we have people that are in the Forex market not to make money, but for control. Now, I'm going to explain what I mean by all of this. Okay, now, people that are in the Forex market to make money are banks, hedge funds, brokers, and individuals. Okay, now banks are normal banks we know, okay, like Access Bank, Fred Bank. Trust me, all the money you're saving in your bank, banks are using it to trade Forex. Banks are the number one player. They are one of the top players in Forex market. In fact, they won't tell you, but banks have people they employ to actually just trade Forex for them. That's what those people do. They trade Forex for them. Okay, now these are number one of the categories of people that are in the Forex market to make money. Now, hedge funds are also part of people that are in the Forex market to make money. Hedge funds include companies, big organizations. Trust me, they also participate in the Forex market and they move money in the Forex market. Then number three, we have brokers. Okay, we have a section in this class where I will explain what brokers are, but brokers, just have that back of mind that brokers are also part of the people that are in the Forex market to make money. Then we have individuals. Now, individuals are people like you and me, okay, retail traders. They call us retail traders because we have the smallest amount of money in the Forex market. In fact, the money we have in the Forex market is so insignificant. Okay, the money we have in the Forex market is extremely insignificant. Now, that is why you need this knowledge, because these people, this other set of people, they have a lot of money, so they can easily sweep you away from the Forex market and you just use your money. Okay, so now you need to know the knowledge, you need to have the knowledge, you need to understand how they trade. Okay, so basically what you're trying to do is that you're trying to understand how these people trade, and it's going to help you to be able to make money and leverage off. Now, what you're doing as an individual is that you're trying to leverage off the analysis of these bigger participants. Okay, you're trying to leverage off the analysis. So what you're trying to do is that you're trying to look into what they are doing, know what they are doing, and join them to do whatever they are doing. If not, you're going to lose money because your money is so small. The Forex market trades $6.6 trillion every single day. That is how much money moves in the Forex market, $6.6 trillion. So that is for you to know. I didn't say every month or I said every single day. That is what moves in the Forex. So that's for you to know that there is plenty money. Like even Central Bank of England cannot make all the money. There is plenty money to be made. Now, what do you need to do? You need to position yourself very well to be able to, if not, they will collect the one you came into the market with. Okay, good. Now, these are the people that are in the Forex markets to make money. Now, central banks are not in the Forex market to make money. Rather, they are in the Forex market for control. Okay, for the Forex market is an avenue for them to control the economy of their country. Are you guys following me? If you're following me, please drop some 2 on the chat box. If you're following me, please drop 2 on the chat box. If you're following me, please drop 2 on the chat box. Okay, amazing. Only Kelechi is following me. Others, are you guys not following me? Jennifer, Amanda. Okay, Alexander drops 3. Okay, whatever. Okay, you're actually following me. Okay, now good. Central banks, they are in the Forex market to have a control of their economy. Okay, so let me explain what I mean by this. For instance, if you are looking at this my chart, there's something we call trend. Okay, something we call trend, and this particular currency is Great British pounds against the United States dollar. Okay, so this chart is actually for Great British pounds against USD, that's the dollars. Now, this market overall, it's in what we call a downtrend. Okay, overall, it's in what we call a downtrend. Now, this means that overall, Great British pounds is losing strength against the United States dollar. Okay, it means that United States dollar is way stronger than Great British pounds. Okay, now there's an extent it would get to. The Central Bank of England, they won't just fold their hands and watch their Great British pound drop to the ground. Okay, they're not going to fold their hands and watch it until it drops and falls down to the ground. There's a point it will get to. They will pump in money into their economy. Are you guys following me? There's a point it will get to. They'll pump in money into their economy. And once they pump in that money into their economy, you see this chart to start moving upwards. So the currency is going to start gaining strength. Are you guys following me? Are you guys understanding what I mean by they're in the Forex market for control? Now, trust me, why are they doing this? Because if the currency becomes too low, investors are going to be scared of investing in that particular currency. Are you guys following me? If you're following me, please drop some on the chat box. Investors are going to be scared of investing in that particular currency because it's losing value. It's just like Naira. If you open Naira on the chart, if you open Naira on this, let me try to open Naira for you guys to see. Let me open Naira. Okay, so you're going to see how Naira looks like on the chart, but can you see? Like you can barely even see anything. You can barely see anything. So nobody wants to invest in a currency like this. Absolutely nobody wants to invest in a currency. This is how Naira looks. Very, very, you can't even make any meaning out of it. You can't make a single meaning out of it. So nobody wants to invest in a currency like this. So that is why that is why this sorry, let me change this back to. So that is why central banks, they try to be in charge of this their economy by either pumping money or removing money. Now, another thing too, when the currency of a country is too strong, for instance, if this currency is going it's moving up so much, like it's moving in an upward direction so much, at some point people will start taking advantage of that currency. Okay, they'll start hoarding money in that currency. For instance, of course, a lot of people are hiding their money from naira to dollars to save more. Now, trust me, this also has a way it affects the currency of the central bank of that country. They will withdraw a lot of money from their economy, okay, to bring that particular economy down. So the goal is to put it at an equilibrium. Okay, the goal is to make the currency of a country to be at an equilibrium. Take advantage of the economy. Now, you don't want it to be too low so that the economy of the country is so bad and investors become scared of investing in that particular currency. So, do you guys now understand what I mean by central banks are in the forex market for control? They're not necessarily in the forex market to make money, they're just there for control. Okay, so if you actually understood what I explained, please drop some two on the chat box. Drop some two on the chat box. Let me know who and who. Okay, amazing. Jennifer is following. Please, who is iPhone? iPhone, what's your name, please? I was asking before. Vivian, are you following me? Vivian, you just joined. Are you understanding what I'm saying? Okay. Vivian, can you okay, amazing. If you understand, I really want to be sure that everybody's following up with the class. Now, the next step we're going to is what I'm going to explain is what we call broker. Now, what is a broker? Who is a broker? Now, a broker is simply an intermediary.
Yes, I can hear you.
Okay. Now, brokers, what do they do for you in the forex market? Brokers are the intermediaries between you and the forex market. Originally, as individual sorry about that. My network is being a bit messy, but I think
hope
it should be fine.
the recording will be able to join together.
That's exactly what I'm thinking about now, but it should, or even if it breaks, I'll still send everything together. It should. Okay. I think the network should be fair. I was using Wi-Fi, but now I'll switch to my local network so it doesn't break again. You guys can hear me, Abby?
Yes, we can hear you.
Okay. All right. So now brokers, what do they do? Brokers actually give you an edge to trade in the forex market by borrowing you some money. Okay. Now you don't see this money they borrow you, but they are.
Yes.
Are you guys following? Can you hear me? Can you hear me?
Yeah, I can hear you now.
Okay. I'm sorry about this whole network stuff. Okay, I was trying to tell you that the way we have banks, okay, the way we have normal banks like Access Bank, GT Bank, First Bank, whatever bank you want to mention. Now you can actually liken brokers to being online banks. Okay, they are actually banks in the forex market. So the same way banks can loan you money, okay, to open a business or start a business or whatsoever. Now, that is also the same way brokers actually can loan you some money to trade in the forex market. Now, this is what brokers are. We have different types of brokers. There are so many of them. There's Hugosway, there's Eknes, I think there's Wanda. There are so many brokers that you can actually choose from to trade in the forex. I think now we will have things like Octa FX in Nigeria and stuff like that. So these are brokers, and this is what they do for you in the forex market. Okay, they actually help you to leverage, and they actually help you to be able to make money in the forex market. So is that understood? Do you guys understand what a broker is now? Do you understand what a broker is now?
Yes, I understand.
Okay. I don't know why this class is not interactive. I'm not happy about it, Sha. Okay, now let's move to the next. Next thing we are going to look at is base and quote currency. Base and quote currency. You need to have an understanding of this thing that I'm saying, no, because you will get lost at some point if you don't understand. So the next thing I'm going to explain now is base and quote currency. Now, forex will bring out a list of them. Okay, so these are the all. Once you type GBP USD, right, it's going to bring out a list of different brokers for you. Now, if you're looking at this place, you can see all of them right here. They're all GBP USD, right? GBP USD, GBP USD, GBP USD. Now, it's showing you different brokers, FXCM, Wanda, Forex.com, Pepe. So these are different brokers that you can trade GBP USD on. Are you guys following me? So these are different brokers that you can trade GBP against. GBP is Great British Pounds. Okay, so these are different brokers that you can trade GBP USD on. So if I change this to AUD USD, AUD USD is Australian dollars, okay, against USD. So you can see Australian dollars. So you can see it's always one currency against the other, okay? Now, we actually shorten these abbreviations, okay? AUD is Australian dollar, USD is US dollar, GBP is Great British Pounds, NZD is New Zealand dollar. So we have different, with time you'll get to, if you're not yet familiar with them, with time you'll get familiar with most of them. So it's always one currency against the other currency. It's always one currency against the other currency. And now, we now have what we call base and quote currency. Now, base currency is the first currency. Okay, for instance, here I have GBP USD. Let me write it out. Let me be very, very explicit. So now I have GBP USD. Okay, so GBP is my base currency, and then USD is the quote currency. So the first currency is the base, and the second currency is the quote. Are you following me? So if you're trading this currency, it means that you're trading GBP against the USD. Okay, so if I open my chart, the way my chart is open now, so the chart I'm seeing is chart for Great British Pound against US. So if this chart is moving downwards, okay, it's moving downward, it means that GBP is losing strength. It means that the base currency is losing strength. But if this chart is moving in an upward direction, it means that the base currency is gaining strength. What I said now, is you understood? I feel like what I said now should confuse some people. If it confuses you, please
No, we
notify.
No, it confused me, oh please.
Yeah, I know it will confuse some people.
Right again.
Good. I want to know who is talking. Who is talking?
It's
Jennifer.
Chizoba.
Okay.
Yeah.
Now,
It's easier.
okay. Okay. Now, I said we have what we call base and quote currency. Okay. Now, Forex is always one currency again. For you to successfully perform a Forex transaction, you need two currencies. For you to successfully perform a Forex transaction, you need two currencies, one currency against the other. Okay. Now, the first currency, so if you open your chart, okay, you're going to see the currency pairs represented in abbreviations like this: GBP USD, you're going to see AED USD, you're going to see NZ USD, you're going to see, like, you're going to just see different currencies, right? Now, for some reasons, USD is always the post currency. I don't know why, but for some reasons, USD is always the post currency, always the second currency. I don't know why that is. Okay. Now, the first currency is what we call the base currency. And the second currency is what we call the quote currency. Okay. So if you're looking at GBP US, for instance, now what this means is that you're trading the Great British pounds against the United States dollar. Okay, it means that you're trading the Great British pounds against the United States dollar. So what does this mean? So this chart right here actually represents the chart of Great British pounds. Okay, so if this chart is moving downwards, okay, you can see that overall, if you're looking at it, you can see that it's moving downwards. So it means that Great British pounds is losing strength. Jennifer, are you following? Yes.
Yes.
So it means that it's losing strength. But if this chart is moving in an upward direction, okay, it means that this Great British pounds is gaining strength over the USD. Do you understand it now?
Gaining strength. Yeah. Yeah.
Good.
Yeah.
Now, the
Yes.
opposite is exactly the case. So for the fact that this currency, for the fact that Great British pound is moving down, okay, which means it's losing strength, which means automatically USD is gaining strength. Okay, so once GBP is losing strength, it automatically means that the USD is gaining strength. Is that not it? That is automatically what it means, right? Now, if
Yes.
the USD
Yeah.
is gaining strength, if the USD is gaining strength, automatically it means that USD is losing strength. So if GBP is gaining strength, automatically it means that USD is losing strength. Okay, so do you get it? Is it clear now?
Yeah.
Yes.
Vivian, do you
Yeah.
understand? Vivian, do you
I
understand?
understood a little. And,
What part did you get lost?
okay, this USD, the USD part, but I understood the GBP.
Okay, I mean, now in your chart, you're not going to see anything like USD GBP. Let me explain it in another form. Okay, you're not going to see anything like USD GBP on your chart. You're not going to see anything like this. So what you're going to see is just GBP USD. What does this mean? I remember I told you that if GBP is moving downwards like this, right, it's losing strength. And for the fact that GBP is losing strength, it means that USD is gaining strength. It's just like, for instance, you're fighting with someone, okay? If you're in a fighting context with someone, if you're falling down, like you're the one dying, which means the other person is winning, right? You're the one losing, the other person. So if the other person is losing, it means that you're winning, right? They're just two opposite things.
Yeah.
Now, what I was trying to explain was that if GBP is gaining strength, it automatically means that USD is losing strength. Okay, if GBP is losing strength, it automatically means that USD is gaining strength. Okay, so whatever happens for this one, the opposite is what happens for the other one. Vivian, do you get it now?
Yes.
Are you sure?
Yeah.
Yes.
Okay.
But I want
Okay.
to ask, sorry.
Yeah,
If
go ahead.
how am I going to know that USD is gaining strength? Like
Now, because for the fact if you're looking at this chart now, you can see that this chart is moving downwards in a downward trend. So for the fact that this GBP is moving downwards, automatically it means that USD has more strength than the GBP. That's why GBP is moving down, because USD has more strength over it. Vivian, do you get it?
Yeah.
Good. Now, if this chart starts moving up, if this chart, something happens and this chart starts moving up, it means that GBP has now gotten more strength over the USD. So USD is now
Trend than the US. Yes.
exactly. That is what it means. Okay, so that is it about base and put currencies. Now let's look at the next thing we are going to look at is Forex market hours. Okay, Forex market hours. Now, Forex market is a market that runs 24 hours, 5 days in a week. Okay, Forex market runs 24 hours, 5 days in a week. Okay, so it opens
Not yet.
Actually,
can
yeah,
you see my
it's
screen
good.
now? Okay.
Yeah.
Yes.
All right. Okay, now I was trying to tell you guys that if you open this chart, this particular chart now, if you open it on Friday from say 10:01 p.m., you're going to see that it's not going to be moving. It's not going to move until Sunday, 10 p.m. on Sunday. That's when it starts moving again. So that is actually how the Forex market works. Now, we have 4 sessions in the Forex market. Okay, we have 4 sessions that are traded in the Forex market. We have the Sydney session, we have the Tokyo session, we have the London session, and we have the New York session. Let me write it out. We have the Sydney session. We have the Tokyo session. We have the London session. And we have the New York session. And we have the New York session. Now, these are the sessions we have. Now, what does this mean? Sydney session is when Sydney, I think Sydney is Australia, right? Sydney is Australia. So this is when the banks in Australia open. Okay, so when the banks in Australia opens, that is what we call the Sydney session. Now remember that banks, I told you guys that banks are like the major players in Forex market. Remember when I said that? So whenever the bank in Australia opens, and it's usually the first session to open, automatically Forex market opens. It's usually the first session that opens, and that's the session we see when you open your chart by 10 p.m. in Nigeria. Okay. Now, Forex market is usually the timing is usually based on GMT, Greenwich Meridian time. Okay, that is actually the time they use for Forex market, GMT. That's Greenwich Meridian time. That's actually the timing that's actually used. So this Sydney session opens by 10 p.m. Greenwich Meridian time. So that is the time it opens. So whenever I open your chart, it is the first session that starts, and it's called the Australian session. Okay, so it's open from 10 p.m. till like 6 a.m. Okay, this session, I don't know if you have notes, if you're taking down notes. So this session is open from like 10 p.m. till, let me indicate it soon, because there's something I'm going to explain with this. I'm going to explain something with this, so let me try to. Sorry, you guys should hold on. The session is open from 10 p.m. to until 6 a.m. 6 a.m. Now, the next one is Tokyo session. Tokyo session. Now Tokyo session is open. Tokyo session is open from 12 midnight. That's in Nigerian time, 12 a.m. till, and it closes by 8 a.m. Nigerian time. 8 a.m. Nigerian time. I'll explain what all this means. Okay. Now the next session is London session, which is the biggest session. Next session is the London session, and London session opens by 8 a.m. Okay, up until I think 3 p.m. It opens from 4 p.m. up until 4 p.m. Okay, now the last session is the New York session. That is the American session. Okay, and American session opens by 4 p.m. up until that. This is like in Nigerian time. This is in Nigerian time. I converted to Nigerian time up until 10 p.m.
Okay.
Yes, up
Okay.
until 10 p.m. So these are the market sessions. Okay, now what does this mean? This means that in Tokyo, someone sent a message. What did she say? Okay. Okay, so this means that this TV session, I told you guys that it's Australian banks. No, now this means that Australian banks in their time, okay, you can actually convert it to check what time it is in their time. But if you convert it to Nigerian time, it is 10 p.m. and it's open, which means banks in Australia are open from 10 p.m. up till 6 a.m. That is if you're looking at it in Nigerian time. Okay. Now, Tokyo session is, I think Tokyo is Japan. Yeah, Tokyo should be Japan. Yes. So Tokyo session represents banks at 12 a.m. and it runs up until 8 a.m. Okay. Now the next session is the London session, which is the biggest session. The next session is the London session, which is the biggest session, and it opens by 8 a.m. Okay, 8 a.m. Nigerian time. Okay, and then it runs up until 4 p.m. And the last one is New York session, which represents banks in US. So banks in US, that is banks in USA open by 4 p.m. That is if you're looking at it in Nigerian time, they open by 4 p.m. and then they work up until 10 p.m. So this is just like, for instance, we're looking at banks in Nigeria. They don't use banks in Nigeria in the Forex market. Of course, Nigeria is not even supposed to be considered in the Forex market. So it's just the way that banks in Nigeria open by 8 a.m. and then they close by 4 p.m. Okay, so this is exactly the same thing that happens here. So as long as banks in these countries are open, the Forex markets will keep running. Okay, as long as these banks are open, the Forex market is going to continue running until they close. Okay. Now, if you're looking at this timings I have here, you can see that there are some that overlap with each other. There's something we call overlap. Okay. For instance, you can see that Sydney session, for instance, opens by 10 p.m. and closes by 6 a.m. And you can see that Tokyo session opens by 12 a.m. So you can see that Tokyo session actually opened in between this Sydney session. Of course, you can Sydney session, you can see I said it opened by 10, 11, 12. So once it's 12, of course, it's 12 a.m. Tokyo session opens, and then Sydney session is still running. So that period when Tokyo session and Sydney session are, please, whose background is that? That period when Tokyo session and Sydney session are running together, that is what we call overlap. Are you guys following me? If you're following what I'm explaining, please drop 2 on the chat box. If you're following me, please drop 2 on the chat box. Okay. All right. Vivian, are you following me? Amanda, Rita, Kelechi, are you guys following? I'm trying to explain what I mean by Vivian. Did you say no?
I didn't really get the because in this Sydney session I thought 10 p.m. till 6 a.m. So how did it mean that from that 6 a.m. forward is still Sydney session before 12 a.m.?
No, that's what I'm trying to explain now. I'm trying to explain what we call overlap now. Okay. Now, if you're looking, just pay attention, you actually get it. Now, Sydney session opens by 10 p.m., right? It opens by 10 p.m. and closes by 6 a.m. Now, Tokyo session, I'm hearing, there is noise I'm hearing. Okay, now Tokyo session opens by 12 a.m. Okay, now you can see that this 12 a.m. is in between this time. If you're counting this time, you see you count 10 p.m., 11 p.m., 12 a.m. You can see this 12 a.m. is when this one opens. Okay, so which means that from that 12 a.m., Tokyo session is running the same time with Sydney session from that 12 a.m. up until 6 a.m. when Sydney session will now close.
Yes, I get.
Good. Now that is what we call overlap. That period of time where one session is running into another session, that's what we call overlap. Okay, so if you're looking at London session and New York session, so you can see that London session opens by 8 a.m. and closes by 4 p.m. Okay, now New York session opens by 4 p.m., which means this 4 p.m. is an overlapping period between London session and New York session because two of them are running in between at that same time. You can also see it here. You can also see there's an overlap period between Tokyo session and London session. Tokyo session opens by 12 and closes by 8, and then London opens by 8. So you see within this 8 a.m., within this time of 8 a.m. is an overlapping period between Tokyo session and London session because two of them are running at the same time within that session. Is it understood now?
Yes.
Yes,
Good.
I have a question.
Yeah, go ahead.
Yeah.
Sorry for cutting you short.
No, it's fine.
London section, you said London section is the biggest section. Is it
Yes.
because of the volatility?
Yes, there's more volatility in the London session than in any other session. In fact, the highest volatility is when London trades, I think it should be like 34%. Okay, London has like 31% of the entire volatility in the Forex market. London session has 31% of the entire volatility in the Forex market. Then New York session has 19% of the entire volatility in the Forex market. What's the next one? Sydney session has 3% and Tokyo session has 8%. Okay, so you can see that London session has more volatility. Now, London session has more volatility, then followed by New York session. So that period when London session and New York session overlaps, you can see that particular time is going to have way more volatility because it's bringing in the volatility of both London session and New York session and merging two of them together. Okay. So it's just like you're bringing 31% of London session and you're bringing 19% of New York session and add them to. So you're going to see that there is going to be way more volatility that particular time than other sessions. Okay. So do you get it? So now, talking about the best time to trade is London session and then New York session, especially the time of overlap between London and New York. Why? Because of the high volatility in the market. So if you have actually done your analysis and your analysis is right, okay, in these sessions, the market moves very fast. So if your analysis is right, the market will just move really. Sorry, please, guys, I'm on a trade. Let me check my trade, please. Don't be angry. Let me check my trade. Sorry. Wow. Okay. Let's go ahead. Okay. So please, I was explaining. Yeah.
Emphasize more on it. Let me understand.
Volatility just means how fast the market moves. Markets move really just like how fast the fastness of the market. That's what we mean by volatility. Okay. Yes, volatility means the fastness of the market. So the market moves really fast in these sessions. All right. Good. Is that understood now? So that is it about. Yeah, so that is it about market session. Someone wants to ask a question.
Yeah, I want to ask. This Forex market hour, does it happen every day, like from?
Yes, every day. Each day, that's the way it is every day,
session.
Monday to Friday.
Like each day must have Sydney session, then Tokyo.
Yes, every day. At the beginning of every day, it resets. So the Forex market resets by 10 p.m. every 10 p.m. every day, Forex market resets and goes back to Sydney. So the first session is Sydney. Remember, I told you guys that Forex market opens on Sunday by 10 p.m., right?
Yeah.
So
Yes.
immediately
Yeah.
the market opens, the first session is the Sydney session. The second session is Tokyo session. The third session is London session. The fourth session is New York session. The next day, once it's 10 p.m. the next day, it resets and starts like this again. Once it's 10 p.m. the next day, it resets and starts like this again, up until peep and pipette. Now, what is PEEP? PEEP, I actually like to look at PEEP as the unit of measurement in the Forex market. That's how I look at PEEP. Okay. For instance, the way you actually say that, the way you can actually say that you measure length in centimeters, measure liquids in volumes, you measure height in inches. Okay. Now, how we measure the Forex market is called pips. Okay, we measure the Forex market in pips. So if the market moves, you can say that the market has moved 1 pip or it has moved 2 pips. Like, you guys understand? For instance, now if you're measuring something, it can be like the height of this. Okay, if you're measuring a wall, it might be like the height of this wall is like 5 centimeters or 8 meters, whatever. Okay, or it can walk. It can be like, I've walked from here, walking from, okay, let me use Lagos as an instance. I'm in Lagos, maybe like walking from VI to Lekki might be like 1,000 kilometers. Now, in the Forex market, this measurement, we call it pips. Do you get it? Do you guys
Yeah.
understand? Yeah, I'll show you guys what's it. Now, if you're looking at the price of the market, okay, let me say, for instance, you're looking at the price of this market here. Look at this area. I don't know if you guys are seeing now. You see that the price of the market always has like 5 numbers after the decimal points, except JPY pairs. JPY pairs are the only exceptions. Now, you can see that the price of the market, you can say I have something like 13100, 13100. So you can see that behind the decimal points, I have like 5 numbers. Let me illustrate it. So I can have something like 1.32000. So this is how price looks like in the Forex market. Okay. Now, this fourth number after the decimal point, this fourth one after the decimal point is what we call the peep.
Yeah.
This is the peep, and this last one is called the pipette. Okay. So if I have cotton. I hope this recording all comes together as one. Like, I don't even know. I hope they all coming together as one.
I don't
But
think
it's fine,
so.
right?
Yeah.
Are you using your Wi-Fi?
I was using Wi-Fi and it kept disconnecting. I changed to my phone and it's still, I don't know.
It also happened to me too. It's happening here because small time the I think the normal network is okay.
Yeah.
Oh.
But if you are using your phone as a Wi-Fi, to just keep them disconnected.
Let me try try to switch back to, let me try to switch back to Wi-Fi. Let me try to switch back to Wi-Fi and see if it's going to be better. Okay. Okay, so I was explaining, I was trying to tell you guys that this 1.234, whatever I have here, so this fourth number right here is my PIP, and this one is my pipette. Now, pipette, we actually don't put pipette into consideration. Okay, pipettes, they actually do not have so much relevance, okay, because they actually even move so fast, you won't even see them move. It's just like if you're telling the time, okay, using a wall clock. Okay, you can liken this pipette to the second hand. Okay, so if you're trying to tell someone the time, you're not going to be like the time is 15 minutes. It won't be like the time is 30 seconds, 15 minutes past 6. Okay, so you're totally going to ignore the second hand. So that is actually the same way we just ignore pipette. So we just put only the pip into consideration when we are looking at, yes. So it's only the pip that we put into consideration. So always have it at the back of your mind that the fourth number after the decimal point is the pip. Okay. Now that is it. Now, what is the importance of this pip? This pip is actually a risk management parameter in the market. Okay, it's actually a risk management parameter. So for instance, let me say the price of the market moved from 13200 to can you see my screen?
Yeah,
no. Can you guys see my screen?
Yes. Yeah.
Yes.
Okay. All right. So let me say I was trading in the market. Okay, when I got into the market, the price of the market was 1.3534678. Okay, and when I got out of the market for 34, let me say 6 okay, 634. Okay, so let's use this as an instance. Okay, so now remember I said we don't consider this pipette, we totally ignore this pipette. So what do? You just subtract the pip. Remember I said the pip is the fourth one. 1, 2, 3, 4. So what do you subtract? You subtract this 7 and 3. Subtract 3 from 7. Now what is the answer you get? Yes, 4. The answer you get is 4, right?
4, yeah.
Which means the market, the market moves 4 pips. Now this is in the case of a sell. This is the case if you're selling. Okay.
Yeah.
So you can see that the market moves 4 pips from this point to this point. Now this is how we calculate pips in the market. It is only this fourth one that we consider. So you can just say that the market moved 4 pips. Remember this one, you're not putting this last number, don't put it into consideration. Don't do anything with this last number. Just subtract you can subtract from the first one up onto here. Of course, if you subtract this one, it's going to give you 0, 0, 0, 0, 0. And then this is actually where you have your, this first number is actually the one. I just want to have it at the back of my mind. This first number is the one you put into consideration. That is the one you actually look into if you're calculating pips. So it means that the market moves 4 pips from this point up onto this point. Do you guys understand the concept of pip now and pipette?
I have a question.
Someone wants, yeah.
Yeah.
Where did you get lost? I
mean,
your line is
Where can we
breaking.
even
I can
find
barely
the
hear.
pip?
Can you hear me?
Look at, yes, I can hear you.
I said the pip, in terms of calculating the pip, the first one, is it the price or I don't know? How do you, that is the place I
look at the price. Okay, now, before I start explaining it, I told you guys to look at the right-hand side of my screen. You can see numbers I have at this right-hand side of my screen. Can you see them? Can you see these numbers at the right-hand side of my screen? Now, these are prices of the market. These are the prices of the market. So currently, look at where the price of the market is. I don't know. If you look at my screen, you can see a very faint line, a very faint green line. Okay. And
Yeah.
look at this green. You can see it's moving. Now, this is the price of the market. You can see it keeps moving up, down, up, down, up, down. So if you're looking at it carefully, you see that the last number is the one that is changing so easily. So that last number is the pipette. Now, this is why we don't really put it into much consideration. You can see that's the number that is changing more rapidly. And then in between the changes, you can see that this fourth one is also changing, but not as fast as the last one. Okay. Now, you can see it's now 2.9, it's now 2.7. You can see now 2.6. Are you guys seeing what I'm explaining?
Yeah.
Are you guys looking at this price? Good. Now, this is what we use to calculate pips. Look at it. So it is this, for instance, let me say now it's at 4.4 and it moves down. If you move down from this 4.4 up to like 3, okay, now it's at 4.4 and then there was time it moved up to 3. So if you subtract that 3 from 4, you can see that it's 1. So you can see that this market, since we've been looking at it, it has moved like just 1 pip. It has come all the way up again. You can see it has come down. I don't know. It's happening very fast. I don't know if you guys are seeing it. It's happening very fast. Just look at, okay, see, focus on the last 2 numbers. Just focus on the last 2 numbers, the 4 and the 8. Now you can see it has changed to 5 and 4. Are you guys seeing it?
Yeah.
Yes.
Good. Now you can see that those last 2 numbers are the ones that are always changing so fast. They're the ones that are changing so fast. So that is what we use to calculate pips. So you just subtract from where you, and now you use this when you're trading. So if you get into a trade, let me say for instance, you got into the trade when it was 5.1, okay, and then you get out of the trade when it was like 3.1. So what you subtract where you got in, where you got out of the trade from where you got into the trade, and that will give you the pip movement the market has done. Is it clear now?
Yes.
What if
You have a question?
what if the pit becomes the same as the other pit?
Yes,
Say
that
4.
means that's called breaking even. That means the price of the market is at a break-even level. We'll still get to that point. Yes, it's called breaking even. When you got into the market and when you got out of the market, if the price is the same thing, it's called breaking even. We'll still get to that point. Okay?
Okay.
Yeah.
Good.
I have a question.
Yeah, go ahead.
Is the price that we're seeing now, is it for the base or the quote currency?
The price of thing is by price of the base currency.
Okay. All right.
Yes, the chart you're looking at is the chart of the base currency.
Okay.
Yes, that's the first currency, that's GBP. So this is the current price of GBP. All right.
Okay. Yeah.
Good.
Thank you.
Now that's it about PIP and PIP. So the next thing we're going to look at is what we call the spread. Now, remember when I started this class, I told you guys something about brokers helping you to trade in the Forex market by borrowing you money. Now, trust me, they're not borrowing you this money because they like you. Okay, they're not borrowing you this money because they like you so much. Trust me, they are charging you for this money they are borrowing you. Okay, they're charging you for this money they are borrowing. Now, that money they are charging you is what we call spread. Okay, that money they are charging you for helping you do your transactions. Sometimes they call it spread, sometimes it can come in form of commissions, but most times it comes in form of spread. Let me write it out. So most times it comes in form of spread. Okay, so when you place your trade, when we start trading, if you place a trade, automatically that trade is going to start off in the negative. Why is your trade automatically always going to start off in the negative? Because you have to make your broker's money before you start making your own money. Okay, it's just like someone borrowed you money it's just like when banks borrow you money. Okay, you have to pay interest on those loans they paid, they gave to you, right? You have to pay interest. So you can liken this to paying interest on the money your brokers give you. So it's not like they're not borrowing money because they like it. That's why I say brokers are also in the first market to make money. Now, brokers are not trade. They're not in the first market to make money by trading like you. Brokers are not in the first market to make money by trading like you. They are just there to make money by borrowing you money, and then they are charging you for the money they are borrowing. So that money they are charging you is what we call spread. It's a very, very simple terminology. I'll show you guys how it works. So that is simply what we call spread. The money your banks, the money your brokers charge you for allowing you do your transactions on their platform. That is what we call spread. It's very, very simple. It's a very, very simple
I don't
concept.
understand though. It's confusing.
When you place trades, okay, when you place a trade, okay, there's a certain amount of money your brokers charge you for placing trades on their platform. So most times it's around $3. Most times it's around $3, $2. That's actually the range, I think, depending on your account size and the trade you're placing. Okay, depending on your account size and the trade you're placing, that money they are charging you for placing that trade is what we call spread. Do you get it now?
Let me write it down.
Not really.
There's nothing in it now. Like, it's just a straightforward English. Like, the way I explain it is the way it is. It's just like you want to stay in someone. Okay, it's just like you want to stay in someone's shop to sell something. Okay, you want to stay in someone. You have goods for sale, but you don't have somewhere to stay to sell it. You come to someone's shop to sell your stuff, and the person be like, okay, for you to stay in my shop to sell this thing, you pay me 200 naira. Do you get it? So that money you're paying that person, we call it spread in Forex. Vivian, do you understand it now?
Yes.
Good. That's simply what spread is. That's just it. There's no too much drama inside. That's just what spread is. It's the money you pay brokers for doing your transactions on their platform. That is it about spread. When we start trading, I'll show you guys how it works. I don't want to complicate things from this beginning because this is a beginner. I don't want to complicate it. Just know the concept. When we start trading, we'll now actually see how these things work. So the next thing I want to look at is lot sizing. Whose mic is that? Whose microphone is that, please?
I don't really know. It's too noisy.
Everybody should just mute so that we know.
So the next thing we're looking at is lot sizing. So you can either call it lot sizing or position sizing. You can either call this lot sizing or you can call it position sizing. Now, this is what determines the amount of money you make or lose in the Forex market. Okay, lot sizing or position sizing is what determines the amount of money you either make or lose in the Forex market. Okay, now we have three types of position sizing. Okay, we have the micro lot. Okay, and the micro lot means that you want to purchase 1,000 units of the base currency. Okay, and each pip movement is 10 cents. Each pip movement the market makes is 10 cents. Okay, now the next one is mini lot. And it means that you want to purchase 10,000 units of a particular currency. And each movement is 10 cents, 0.1. That's 10 cents. So this one is $1. So each movement the market moves here, you're making or losing $1. The next one is standard lot size. standard lot, and each movement the market moves, you're either making or losing $10. Either making or losing $10. Now, remember when we talked about peep movement? Okay, let me explain. Now, the first type of lot size we have in the market is micro lots. Okay, now this micro lot means that you want to purchase 1,000 units of, for instance, if we are looking at GBP USD, it means I want to purchase 1,000 units of GBP against USD. Okay, so there are on your MetaTrader 4, there are places you impute all these parameters. When we start looking at MetaTrader 4 interface, when we start going into technical analysis, for those of you that don't know how to use this, I'm going to show you how we are going to impute these things. Okay, there are places you impute these parameters. Okay, now if you place a trade using the micro lots, what you're telling your broker is that you want to purchase 1,000 units of this particular currency you're looking at against the next one. That's GBP against USD. Okay, now what does this mean? This means that every pip movement the market makes, you're either going to make or lose 10 cents. So if the market moves in your favor, 1 pip, you're making 10 cents. If it moves in your favor 2 pips, you're making 20 cents. If it moves in your favor 30 pips, you're making 30 cents. But if the market moves against you 1 pip, you're losing 10 cents. If it moves against you 2 pips, you're losing 20 cents. If it moves against you 4 pips, you're losing 40 cents. Are you guys following?
Yeah.
Are you guys following what I'm explaining?
Yes.
Yeah.
Okay. Now, that is it for micro lot. Now, we also have, 0.1 is just, okay, I didn't include what you input. Now, the order you give to your broker is, once you write 0.01 on your broker, they know that you're talking about micro lots. Okay, so this is the order you put on your broker. What you put on your broker is 0.01. Once you write 0.01, your broker automatically knows that what you're talking about is 1 micro lot, and they know that what you want to purchase is 1,000. If they automatically know this, other things you don't see them in your broker, you don't see them. This is the only thing you can actually see. Okay, so once you put in this order, it's just like an order, it will interpret as this to your broker, so they automatically understand it. So this process, you might not see this process happen. This is just what you will see. Okay, now for the mini lot means that you want to purchase 10,000 units of this currency against the next one. As in the case we're using GBP US, so it means that you want to purchase 10,000 units of GBP US. So this means that if the market moves in your favor or against you by 1 pip, you're making or losing $1. Okay, so if the market moves in your favor 2 pips, you're making $2. If the market moves against you 4 pips, it means you're losing $4. Now the order you give to your broker is 0.1. So once you write 0.1 on your MetaTrader 4, your broker automatically knows that what you're talking about is 1 mini lot. All right, so they automatically know that what you want to purchase is 10,000 units. Okay, they automatically know that this is what you want to purchase. This is just the order you place. Once you put it, they know. Now the next one is 1 standard lot. Okay, now this one, each pip movement is $10. So if the market moves in your favor or against you, once you're either making or losing $10 depending on how it moves. If it moves 5 pips in your favor, you have made $50. If it moves 5 pips against you, you've lost $50. And the order you give to your broker is 1. So once you just write 1 on your MetaTrader 4, your broker automatically knows that you're talking about 1 standard lot size. Are you guys following me?
Yeah.
Vivian, are you following? Amanda, Rita, Kelechi, Alexander? I hope all of you are following. Jennifer? Now,
Yeah.
this is just an example. Now, you remember this 0.01, you can actually change it to 0.02. Okay, it can actually be 0.02, 0.02. Okay, the other one can actually be 0.2. The other one can actually be 2. So if you do this, so this 0.2 is still a mini lot size position. So any position that has 2 decimal points, any position that has 2 numbers behind the decimal point is still a micro position. Any position that has 1 number behind this decimal point is still a mini position. Okay, and then any whole number is still a standard position. So you can have 0.09. 0.09 is still a micro lot. Okay, you can have 0.8. 0.8 is still a mini lot. You can have 5. 5 is still a standard lot. So what does this mean? If I have 0.2, it means that the market, if it moves in my favor, okay, I'm making 20 cents on each movement. If it moves against me, I'm losing 20 cents. Does it make sense? Are you guys following? Does it make sense? Good.
Yes.
Now, if I'm using 0.2, it means that if the market moves in my favor 1 pip, I'm making $2. If it moves against me 1 pip, I'm losing $2. So if I'm using 2 standard lot size, it means that if it moves in my favor 1 pip, I'm making $20. Okay, if it moves in my favor 2 pips, I'm making $40. So you just multiply it. All right, just multiply whatever you have here by this one, and that is just it. Is it clear?
Yeah.
Yes, it is.
Okay, so that is it about lot sizing. That is what lot sizing. Vivian, do you understand lot sizing now? Vivian, are you
I
sure?
think to say I understand about the lot size, but what I mentioned was spread. No, my network was bad, so I went off before
So what you don't understand is what?
the spread. I didn't get the explanation.
I just said spread is just money your broker charges you for placing transactions on their platform. Okay. I give them an example. For instance, if you have products to sell and you don't have a place to sell your products, you probably meet someone that has a store and be like, okay, please, can I stay in your store to sell my products? They'll be like, okay, you're going to pay us 200 naira for staying in our store to sell your products. Now that 200 naira you're paying them, we liken it to spread in the Forex market. Do you get it?
Yes.
Do you understand? That's simply what spread is. Okay, so let's move on. So the next thing we are going to look at is leverage. Okay, please pay attention to this leverage. It's a little bit tricky. This leverage is related to this lot sizing. If you don't understand this lot sizing, please tell me now, because this leverage is very, very related to lot size, and they work hand in hand. Okay. So Vivian, that topic is an advanced topic, okay? So it's for master's class, so you have to hold on up to that point. Okay, I just want you to understand the concept now, just know what it means. Do you get it?
Yes.
Yeah, so let's not skip the classes. Okay. So now the next thing we are going to look at is leverage. But you understand lot size very well. Everybody
Yes, I
understands
do.
lot size very well. Good. Now let's move to leverage. Now, remember I told you guys that leverage is simply the privilege your broker gives you to be able to trade more than the amount of money you have in your bank, in your broker's account. Now, originally, I told you guys that originally, Forex market was not really available to everyone because we didn't have the amount of money needed to trade on the platform. But brokers made it possible for us using what we call leverage. Brokers made it possible for us to be able to afford trading in the Forex market using what we call leverage. Now, how does this leverage thing work? It works hand in hand with your what's the name, with your lot sizing. Yes, it works hand in hand with your position sizing. Now, let me say, for instance, you have a $1,000 account. Okay, let me say, for instance, you funded your broker account with $1,000. Funded with $1,000. Right now, if you place a trade with 0.1, 0.1 is 1 minute lot size. You place a trade with 1 minute lot. And now you remember that 1 minute lot means that you want to purchase 10,000 worth of GBP USD. But what you have in your account balance is $1,000. But it's still possible for you to purchase 10,000 worth because of what we call leverage. Now, how does this thing work? You use the price of, so let me say, for instance, when you want to purchase this trade, the price of the market was, let me say, the price of the market was at 1.32000. So let me say, for instance, the price of the market was at 1.32000 when you wanted to make this purchase, right? And what you want to buy is 10,000 units, and what you have in your account balance is $1,000. Now, what does your broker do? You place a trade with 0.1 position. What does your broker do? Your broker multiplies these 10,000 units by the current price of the market. So everybody multiply. Let's multiply 10,000. Remember, it's 1 mini position. I mean, it's 1 mini position you're buying. 1 mini position is 10,000 units. So let's multiply 10,000 multiplied by the current price of the market. Let's say the price of the market when you were making that purchase is 1.32000. So let's multiply 10,000 multiplied by 1.32000. What will it give you? It will give you 13,200. Did any other person multiply?
Yeah, it's 13,200.
Good. It will give you 13,200. Now, 13,200 is the amount of money you need to be able to buy this mini position, but you don't have it. What you have in your account balance is just 1,000. So you can see that the money you have is not even enough to purchase this thing, but you're able to purchase it because of a broker. Now, what does your broker do? Your broker asks you to donate just 1% of this money. Your broker asks you to donate 1% of, so 1% of 13,200 is what? 1% of 13,200, I think it should be 132, right? 1% of 13,200 should be 132. Please, can anybody check it for me? Can you guys check? But it should be 132. So what your broker, good. Now, what your broker needs you to donate is just $132. Now, the remaining of this money, so subtract 132 from 13,200. So 13,200 minus 132, that is 13,068. So which means your broker is bringing $13,000.68. Yes, that is what your broker is bringing, and then you're bringing only $132. Now this $132.
Hello.
You want to say something? Yes.
Yes. How do I get $132? Like, what do I subtract or what do I divide?
What did you say? How do you get what?
$132. Like, how do I get it out of 130?
Just do your normal math now. Like 1% of 430, 1%. Like, do you know how to calculate? If you know how to calculate percentages, or you can just use your Google. use your Google Chrome, type what is 1% of $13,200. Google, if you don't know how to calculate percentages, Google will automatically give you the answer. But this thing, you're not even the one going to calculate it by yourself. Your broker automatically calculates it. Okay, your broker automatically calculates it and then gives you the figure. So just, I don't know how to do that.
I've used my Google.
What did he give you? 132,
132.
right? Yes, that is it. So that's 1% of 13,200. Good. Now, this is what your broker expects you to bring. Now, this $132, immediately you place this trade, your broker will subtract this $132 from your balance. They will subtract it from this your $1,000. Okay? Please, if your mic is the one making that noise, please can you mute? Vin, I think it's your mic. Please, can you mute? Thank you. Okay. Now, immediately you place this trade, your broker will automatically subtract $132 from your balance. This your $1,000 balance. They will automatically subtract it, and then they will lock it down. So it's just like your deposit. It's just like when you want to collect loan from bank, they'll collect collateral from you and lock it down. So that money, they'll just collect it and lock it down, and they lock it down in what we call margin. They lock it down as what we call margin. So that is what you see as margin on your MetaTrader 4. They lock it down and we call it margin. So what does this mean? So this means that I don't know if I should share my MetaTrader. Okay, can someone that has MetaTrader 4 share his or her screen? Can someone who has MetaTrader 4? Let me stop sharing. Someone should share his or her screen. MetaTrader 4 screen.
I have.
All right, share your MetaTrader 4 screen. Share your screen so that you'll be seeing these things, how they work.
Connect me now so that we show.
Okay. Sorry. Okay, you can share now.
Can you see it?
It's coming up. I can't see it.
I've opened my MetaTrader 4.
Are you sharing your screen?
Yes, I've opened it.
Am I the only one that can't see her screen? I don't think any other person can see your screen. We can't see your screen. Okay, we can see it now. Go to your MetaTrader 4. We can see it now. Okay. Now go to your trade. Go to this down trade. No, not the next one. The next one. Okay, good. Now, no. Yes. Oh, yeah. Okay. Now, if you're looking at this, if you're looking right here at the top, we have what we call balance. Okay, we have balance. Then we have equity. We have free margin. We have margin level. And we have margin. Okay. Now, this balance is the amount of money she had in this account before she placed a trade. Okay, this balance is the amount of money she had in this account before she placed a trade. Now, if you're looking down here, you can see margin. The last place down here, we have margin. Now, this margin is the money that they have locked down from this her account. From what I explained, okay, from what I just explained. So this when they deduct that margin, they lock it, and when they deduct that, for instance, in that case, we're using $132. Okay, so once they deduct it, they will come and you see it here, $132. They'll write it here as $132 for you. You just be seeing it there. So in this case, her margin, what they deducted from her account was $10. So that is why you're seeing $10 here as the margin. Okay, so they lock it down there. Now, your balance is the money you had in your account before you placed a trade. Okay, so the money you have in your account balance before you place a trade, that is what you have as your balance. Okay, now there's another thing we call equity. Equity is your balance plus your floating profit or loss. What do I mean? For instance, Vinny, when she placed this trade, her balance was $99,969.32. This was her balance when she placed this trade. Now, her equity is now $99, $965. Why? It's lesser than her balance because she's in negative. Are you guys following? It's lesser than her balance because her trade is in negative. Okay, but if her trade was in positive, they're going to add both the profit she has made. They're going to add it, and it's going to be more than her balance because that is the extra money she has made plus her balance. That's what you're going to be seeing as your equity. So this equity is the free money you have available to place new trades. Okay, equity is the money you have available in your account to be able to place new trades. Are you guys following? That is what we mean by equity. Now, when you place a trade, your balance still remains the same as when you. So even though they deduct your margin, your balance is still going to remain the same. They don't remove it. Now, it is when you close your trades. Okay, after you've closed your trade, that your balance will now adjust to whatever was on your equity.
Yes.
Are you guys following me?
So this margin, is it the money you're trading with?
This margin is the money that have already deducted from your account, like the money that they've collected as lockdown, like money that they've collected from you as collateral.
Okay.
So yes, good. Now this money they have collected from you as per collateral. So this is the money your broker is taking. So if your trade moves in profit, you're going to get your margin back plus your profit. But if your trade does not move in profit, your margin, you're going to lose it. They're going to collect it from you. NEPA.
Okay.
Are you guys getting it now?
Yes.
Good. What margin level?
Free margin.
Let's calm down. We're going to explain everything. Let's just be sure that we have gotten the ones we've explained so far. The ones we've explained so far, has everyone gotten it?
Yeah.
Okay, good. Now, the next one is margin level percentage. So this your margin, right? It's just like
Ima,
I feel like
school.
who is that? Please mute. Who is calling Ima? Please mute. This margin level percentage, I really don't know the use of it right now because I've lost me. But I feel like they're just trying to I think it's just trying to reflect your margin in form of percentage. I don't see the use, or maybe it's just the brokers, they are using it for their own personal, whatever they use it for. But for my personal trading, I really don't know what this margin is used for. I've not used it for anything before. So I just think it's something brokers use on their back end to calculate something. Do you get? Then this free margin is free margin. What's free margin again? Okay, free margin is the money. Yes, it's the available money you still have remaining to trade. Okay, now immediately you place your trade, right? They deduct your margin. Okay, remember I said immediately you place your trade, your balance still remains the same. Yes, your balance still remains the same. One, then your free margin is now like your free margin is the money remaining in your account after they've deducted your margin. That's what they will leave for you as your free margin. That is money they need for you as your free. That is the amount of money you still have remaining in your account that you can use to place trade. Are you following? So you can see that this free margin, as your trade is moving in profit or in loss, your free margin is moving. So if your trade is moving in profit, your free margin will be increasing, which means you have more money available for you to use to trade. Do you get? But if your trade is moving in loss, you see that your free margin will be reducing, which means the money you have available to place trades is reducing. Are you guys getting? So free margin is the amount of money remaining for you available in your account balance that you can either trade with. Is that understood?
Yes.
Good. Then equity is just your balance plus your floating profit or loss. Equity is your balance plus your floating profit or loss. So immediately you close your trade, Vinny, close your trade. Wait, hold on first. Now look at everybody, note the balance. The balance is 99,969.32. See her equity, 99.9. Note everything. Now, once she closes her trade, you're going to see that her balance is going to change to become the same as her equity and her free margin. And just close your trades, Vinny. Close your trades. Now go back. Now you can see that her balance is now the same thing that her equity was showing before and her free margin. Can you see? Once you close your trade, all of them, they'll reset to become the same thing. Immediately you close your trade, they will all reset and become the same. Okay, so your balance does not change. If Vinny places another trade now, okay, let me say now her balance now is 9965, 99965. If she places another trade now, this balance is still going to remain the same. It's not going to change. It's after she has closed her trade that it will now change and reflect her equity when she closed the trade. Do you guys understand it?
Yes, yes.
Exactly. So that is actually how these things work. So any question? I think I've covered everything I have on the beginner's course. I don't want us to waste time on this beginner's course and intermediate. I want us to get to the parts where they are making money, because that's the essence of all these things. So that's it about beginners. That's it now. So that's about beginners.
Yes.
We've talked about everything on the beginners. So any question from anybody? Finn, you can stop sharing your screen. So that's it about beginners course. Any question from anybody? Any question? If there's something you don't understand, you guys are going to get the video.
Sorry, I have.
Yeah, go ahead. Go ahead.
Okay, hello, can you hear me?
Yes, I can hear you.
From that, the Forex section.
Yes.
From the Forex section, you said the time given to us, the one you converted is the time we are to full up, the normal Nigerian time. That's 10 a.m. I mean, the Sunday, from Sunday 10 p.m. to Friday 10 p.m., right?
Yes, that's Nigerian time.
You said the Forex market opens. Okay, that's in Nigerian time, right?
Yeah, I'm just giving it to you guys in the equivalent of Nigerian time. Yes.
Thank you very much.
Yes, you're welcome. Any other question from anybody?
Okay. So it is easier for us.
Just follow it with the time that I gave you. The time I gave you is already Nigerian time. Just follow it with the time I gave it to you.
Sorry, London session is JPPYB.
You can actually, the thing is that you can trade any currency on any pair, on any what's the name, on any session. Yes, you can trade any currency on any session. Yes, but I'm just trying to reflect to you how the banks that have these sessions operate.
Okay.
Yes. But now, remember I told you guys that there is more volatility in the London session. So you might, if you want to trade, always trade within the London session. And it even fits into our Nigerian time from 8 a.m. up till 4 p.m. So it actually fits into our Nigerian time. Yes. So London session and New York session is usually the best time to trade. Yes. Any other questions? Vinny, did you understand everything we did?
Yes, I do, but this, I was thinking maybe spread is something like axe pride and bid pride, something like that.
Ask price is just ask price. Okay, ask price, bid price. Ask price is like how would I put it now? Ask price is sorry, let me find the best way to explain it to you. When you want to buy something, okay, ask price is like the price you're looking at getting it. Then bid price is like what your broker is offering you. You get, so it's not really related to this spread and stuff like that. So although in this Forex, there's a lot of information in Forex.
Everything.
Please, can you mute? She's discussing. Please, you're saying something that's not related to this class. Please mute.
Sorry.
Good. Now, there's a lot. One thing I want you guys to know is that there's a lot of information in Forex. A lot. In fact, if you want to study all the information in Forex in 1 year, you're not going to be done. You're never going to be done. So what I'm going to do in this course is that I'm just going to filter, it very well, and just take you straight to the money making part. So any information I don't give you, just leave it. because at the end of the day, you find out that they're not necessary. You just be beating around the people. That's actually what makes it a lot hard for people to actually learn Forex, because they are beating about so many unnecessary information. There is so much information about Forex. What you just need to find the one that is making you money and then start making money. That's just it. Do you get it?
Yeah.
Yeah. So, any further question?
None.
No. Rita, I didn't hear your voice throughout this class. What's up? Can you unmute? I didn't hear your voice. Were you following everything we were explaining?
Yeah, but you're answering my question on this way.
Exactly.
Yeah.
That's the main part.
Okay, now, but I didn't hear your voice. I wanted to just hear your voice. You get?
No, you'll
Amanda,
be answering my question now.
Okay. Amanda, you are following too, right? All right. See you guys on Thursday. Okay, so on Thursday we're actually going to be getting into intermediate course, and from there we'll now start moving into the main. But I just wanted everybody to get this knowledge, and that will be it. All right.
All right.
See you guys on Thursday. Bye.
Thank you. Bye.
Bye.